Hi, this is Cary with Wicked Signal, bringing you another video analysis. This one on the SP 500 SPDR ETF, symbol SPY. I've done a few SPDR or SPY videos over the last few months. This is more of an update just to apprise you of what I'm seeing on the chart, mostly long term, but it's relevant here into April trade. Just an FYI, I did record this video on Sunday, March 7th, 2021. Before I jump into the SPY, I just want to remind you to tell your friends, tell your trader and investor friends about wickedsignal.com. I have two elements now on the website. Basic, which you've been receiving. If you've been receiving the emails and looking at the videos, you've been looking at the basic membership all along. Premium hasn't officially kicked off because the payment gateway hasn't fully opened yet. That's happening in a matter of days. But I'm not going to hold back video analysis. This will go into the free area. And I'm just telling you about that. If you go into the free area and you give me your first name, last name, email address, you'll receive a new email each and every time a new free video is ready for viewing. Now, in the next week or so, the premium part is going to give you not just one video a week, but at least two, and it'll be more like 3 or 4 in due time. And by due time, I mean by April. We'll be doing probably at least 3, if not 4 videos a week. On all 4 would be related to different stocks, or in this case, this is an ETF, an exchange traded fund. I won't share your personal information with anybody outside of the organization. I won't fill your inbox with all kinds of marketing stuff. And, the new premium service will be $24.95 a month. And, I think it'll be worth it for those of you who trade, the 2 to 3 week to 2 to 3 month time horizons. And that's really sort of the focus of wickedsignal.com. But before I get even deeper into Wicked Signal, let's jump back to the SPDR or the SPY. If you're not familiar with the SPY, I can't assume that you're not, but just know that it's an ETF, exchange traded fund, that's highly correlated to the S&P 500 stock market index. It's designed to actually track the S&P 500. So I think it's 1/10 of the value. If you buy one share, that's essentially 1/10 the value of the cash of the underlying S&P 500 cash index. And so it's a very tradable instrument. It regularly trades over 100 million shares in a day. It's the highest volume ETF in the world. And so it's a great vehicle for parking your money, for investing long-term, and even for day trading. So the levels that I'm going to be giving you here in just a moment, FYI, even though they're weekly levels that'll change a bit over the coming weeks, if you're a day trader in the SPY, these are levels you can certainly trade. Anyway, let's take a look at this part of the chart, which is kind of zooming in over the last couple of years. And you can see there's a trend line here that's been holding the highs. Now, I've been watching this trend line in my S&P 500 E-mini futures analysis, which I do on a daily basis on the commodities and the commodity futures side of my business. And that's a whole nother part of what I do. But this trend line is also identified on the SPY, and it's actually contained the highs 2 consecutive weeks in a row. About a month ago, it comes in at 397.08 this week, the week of Monday, March 8th, and it rises 4 full weeks later, the week of Monday, April 5th, to 401.30. And rather than give you each and every number, I'll let you do the math. Subtract 397.08 from 401.3, divide by 4, and you can add to that 397.8 accordingly and have the exact location of that trend line. And exactness is important in my work with technical analysis. I don't like to rough ball it. I like precision. And so these are areas that you could trade on rallies. Now, bear in mind, the market is strong, obviously, and I'm going to show you support in a moment, but I'm calling this hesitation, this 397.08 to 401.3 area. I do expect it to ultimately be violated. Whether that'll happen this coming week or in the next few months, that's a tough one, obviously. But just know that it is a ceiling. It can contain weekly buying pressures, possibly into April trade. And from here, we can trade down to long-term support, which I'm going to show you in just a moment. And in fact, let's move on to the next slide, and I'm going to show you that support. I'm not going to get into how to create speed lines, but this is an ascending 1/3 speed line that's projected off the March 2020 low. I call it the COVID low from about a year ago, against the most recent high a few weeks ago. And so it is trend defining in a sense, and it's well below the market now. What I like about this ascending speed line is it also roughly corresponds with a rising channel bottom that's based on activity going back over the last 6 or 9 months. These two come together, and you can see actually the week of Monday, March 8th, which we're coming into right now. It begins at 350.98 and drops to 343.08. It doesn't drop. I'm sorry, that's the wrong terminology. The speed line is at 343.08. The channel bottom is at 350.98. And as we continue into the first week of April, which is April 5th, you can see we're at 356.96 is the channel bottom, 353.06 is the rising speed line. Now this area, I'm not anticipating it. I will if we break a certain support level, which I'll also show you in a moment. But just know that if we do test this zone, and once again, you can subtract these numbers out, divide by 4, and you'll have the exact location of this speed line combination channel bottom each and every week in between. It is an area that can absorb selling through the second quarter. And once tested, the market can rally onward and upward to new highs over the following 2 to 3 months. Here is the short-term area that I'm going to show you. I'm just going to show you for the next 2 weeks. So this video will really be good for about 2 weeks if you're just looking at the short-term channel bottom in the red arrow. And I'm going to zoom the chart out so that we can actually properly label it. And you can see that this week, the week of Monday, March 8th, is at 380.83, and it rises next week, the week of Monday, March 15th, to 382.92. Now, we did definitely spike below it last week, but we didn't close below it. And in fact, we closed higher on the week itself. And so, you can buy this area, certainly if you're a day trader. But what I like most about it, is the fact that it offers downward pivot point qualities into later March and early April. In other words, if we do close the week Friday below 380.83 this week, March 8th, or next week, the week of Monday, March 15th, we close the week below 382.92, then we have, I'm going to say, a 1 to 3 week sell signal. I think it wouldn't take much more than about 3 weeks at the most. In fact, I think volatility would spike even higher, and we could get down there within a week or two, which is to say, that 343.08 to 350.98 area, which does rise and narrow into early April. So this area in the low 380s, 380.83, you can, if we settle below it, even on a daily basis, and I like to use the 1%. Right now, that would take us back to about, I'm just going to throw a rough number out there, 380.4, 380.4, something like that. We got 380.83. You do the 1% violation of that. We close below that number at the end of any day this week. We have a sell signal into later March, early April, or however long it takes to continue south into that 343.08 to 350.98 region. Until then, continued settlements above that low 380s channel bottom, believe it or not, does in fact allow another test, possibly over the next week or two, of that long-term trend line, which contained the highs back in February. 397.08 this week, rises to 401.30 that first week of April. And if we settle above that trend line, and I'm just giving you the one number here for the week of Monday, March 8th, we do have a meaningful buy signal on our hands, at least to the 410.92 channel top. And that rises to 421.87 a full month later. Once again, you can subtract the amount, divide by 4, and you'll know where that channel top is each and every week in between. That channel top, now, let me back up a little bit. If we close above that trend line, I think that actually indicates longer-term bullish continuation. So the first stop within 1 to 3 weeks would be the 410.92 channel top. But I think ultimately the market may well continue onward, upward into later year, into what is now, or let's actually say in early April, we'll be at 459.21. So we're giving respect along the way to that 421.87 channel top. That's the first stop where the market could top out for several weeks perhaps. But ultimately, I think once again, closing above that trend line this week at 397.08 should actually ultimately, by the end of the year or sooner, allow a full-throated rally into the 450s, 460s, 470s, or wherever that channel top is at that point in time. I'm not going to get too deep into that. Just know that if we do close above the trend line at 397.08 this week, in the coming weeks, within a week or two of that, I'll update the SPY so you can see it. I like to keep you updated on the SPY. I'm not doing a great job of it, but I think it is obviously the broader market. So if you get a long-term buy signal in the S&P 500, you have to respect all the other stocks that I've been looking at, most of which are large cap stocks, popular stocks. And there's no doubt in my mind that on a broader basis, if the index is rallying significantly, those stocks are going to have a tough time selling off significantly at the very least. So one final thing I want to show you with regard to the support that I showed you earlier here in the lower 350s, we actually have some long-term symmetry here, and that is in the 343.08 to 350.98 region. I could have showed you this actually very early in the slide, but I'm going to throw it in there right now. And there is a long-term channel top that goes back over 10 years in the S&P 500, or the Spider ETF, I should say. And that is at 353.48 to 355.58. So that in itself, that formation in itself, is long-term support. In fact, I'm going to call that ultra long-term support. So those formations that I showed you earlier in the 340s and 350s, and then they rise into the 350s clearly as we continue into early April, those sort of support that whole area. But truth be told, that low 350s, that long-term channel top 343.48 is in itself a valid enough support area to buy into as we look ahead into later years. So any downdrafts right now into the lower 350s should be considered solid longer-term buy opportunities. A longer-term buy opportunity, by the way, also equates to near and mid-term. So even if you're trading the 2 to 3 week to 2 to 3 month time horizon, which once again is the focus of Wicked Signal, that low 350 support I've been showing you here is a good area to at least liquidate any short positions, and certainly consider going long for a 2 to 3 week pop, 2 to 3 month rally, and possibly continued upside follow through following that test into later year. And that is really all I'm going to say for this particular video update on the SPY, brought to you by Wicked Signal.